I'll say welcome to 2026. If you can, please put where you're joining us from on Facebook. Please put where you're joining us from on YouTube. We should be live now. We should be live. We should be live now. Can you hear me, Deepo? Do you get an echo?
I can hear you clearly.
Echo as I'm speaking? Is there an echo?
No, I can hear you clearly.
Clearly, okay. So thank you, everybody. I'm happy that we're able to do this. Unfortunately, we're changing our presentation platform, and so we had a little bit of some technical hitches with our second guest. But I do have some other people that will join us at some point. I welcome you all to 2026. Please put where you're joining us from, if you're on Facebook, if you're on YouTube, especially for those who plan to submit a business plan for the Q1 competition. Please put where you're joining us from. I would like to start, before I introduce my guests, I would like to start by saying something that I heard from my pastor today, one of my pastors, because I have so many pastors. And I was in a service this morning, and the pastor was preaching, and he said that when we wish people Happy New Year, and we bring in bad habits and bad decisions of the previous year, then we should be saying Happy Old Year. If we're going to say Happy New Year, then we should be coming into the new behaviors. And so for the members of the Finance Coach BK community, as we start with 2026, we are going to leave our old money habits in 2025, and we're going to take on new money habits so that we can make new and better progress in 2026. Also, you know, when I talk, I like to say it, Tony Robbins is an American businessman and he's a motivational speaker. And he says that if you don't change anything, nothing will change. If you change nothing, then nothing will change. And so when we listen to Deepo this evening, and hopefully I can get Dr. T to join us as well, then we have to take on, when we take on new habits, we must take action. When we learn new things today to, you know, be financially better in 2026, we have to take action so that we can make progress. Now, today, Deepo has been with us before, and I call him my personal person. Deepo, I'm very happy to see you in 2026. I'm grateful to God for your life. Deepo, I've known Deepo for long, and he's been one of the, I can't tell my money story. I can't tell my efforts to grow wealth. I can't tell the story completely without mentioning Deepo. Another of my pastors that I was listening to earlier on this morning says that the story of his life is not complete if he does not mention the impact of Kenneth Copeland. He says, you can tell the story of Kenneth Copeland and it will be complete without him, but that his own story, he cannot be said to be complete without putting in the efforts and the impact of Kenneth Copeland. So also, my efforts to grow wealth, my effort to be financially free, and my effort to be financially fit will be incomplete if I do not talk about all that Deepo has done for me and continues to do for me. So Deepo is a principal partner of MEAD. MEAD is MEAD, Investment Partners Limited. And his experience involves financial advisory, project management, cash flow management, wealth management, you know, those people that have so much money that they need someone to manage it for them. So I'm very happy to see you this evening. And if there's one thing that I want to share with you people before he starts talking, it's the fact that he taught me a lot about diversification of, you know, my portfolio. And I'm always very grateful to have a chat with him. Deepo, I'd like to just introduce yourself or start with whatever you want to start with while I deal with a little bit of the technical issues I'm having. Please introduce yourself the way you want to, in addition to what I've said to my guests this evening.
Good evening, everyone in the West African and African region. Good day.
And diaspora.
In the diaspora. Mrs. Komarafe flatters me a lot. I mean, my head swells. I probably need to change the size of my caps at home right now. Thank you very much for the words. My name is Oladipo Ojo. I have about 17 years plus experience in the banking space, majored in investment advisory, wealth management, financial advisory, cash flow management, anything in investment, anything that has to do with that. Apart from the fact that it's an occupation, it excites me. The fact that seeing money growth, taking advantage of situation, and seeing how well we can get better in our financial health. So I welcome everyone to today's talk. I'd like to say it's more or less a dialogue. I don't want to be a monologue. So we would share experiences. No one knows it all, and we've all made these mistakes. We've all learned and everything. So we would share experiences. I will be also willing to learn from everyone and share from the little I've acquired over the years and from live happenings around us. So I hope to have a nice time, like everyone as well. Thank you.
Thank you very much, Dipo. These conversations, and I'm so glad that you started that way, because we go into it and we never know it. We never know everything completely. I'm always, even as I bring different guests to talk about, money and their experience, I'm always eager to learn. I'm still hoping that we can get our second guest to join us today. Timilayin, can you do me a favor? There's somebody in, I don't know who that is, and it's a black screen. Who can the person maybe share the name or maybe a video so that we know? Now, Deepa, while I'm waiting for this, sometimes we do this work and yes, thank you very much for joining. That's Ngozi. Sometimes we do this and I'm just kind of not burn out, but I get worried that there's some benefit from all this effort, and people making changes, or am I just, wasting time? It's something that I'm passionate about, and I want people to learn. I don't want people to make the mistakes that I've made, and then I want people to learn the things that maybe I learned too late. Now, over the festive period, I was talking to a young lady, and she said to me that she bought shares on Instagram. I'm still going to go to the core of the questions that I have for you, Dipo, and my friends are very eager to understand how they will invest this year to make money and, the things that they can do better. But so this young lady said that she got onto Instagram and somebody offered her shares at a discount. Now, of course, you and I know we can't buy shares on Instagram. And they added her to a group where there were 3,000 people in that WhatsApp group. And they were communicating with her privately. And this is a young lady who makes money from, working hard with her hands, right? She's a hairstylist and a masseur. I don't know if that's what they call it, the people that do massages. And, masseuse, thank you very much, masseuse. And she goes and she says that she was swindled of 2.5 million naira Depot.
Wow.
So please tell my friends around the call how they can buy shares. They don't have to buy shares on Instagram. This is just dedicated question. No, I'm just using the story to tell you that, we have a lot of work. We have a lot of work.
Yes. I've come across a couple of such posts, and what I do personally as my contribution to the society, I report those pages. There are a lot of them on Facebook and Instagram. They put a picture of a very famous person and say that the person anchors a class, that they have insider information on some stock and everything and all that. Out of curiosity, sometime last year, I joined the group to know how foolish. So
people can be.
The usual pattern is that when you join it, you start to see fake testimonies. People tell you, "Oh, thanks to Dr. So and so and so and so, I bought also shares at so price. It's a special arrangement, like a private placement, and I've made XYZ amount." You will see close to a quarter of the group aligning with that thought. Of course, as someone who has been in the space for long, I know there's nothing like that. But unfortunately, like you said, there's still a lot to be done in the space of financial
Education. Yeah.
There, as of today, you cannot buy stock on Instagram or Facebook. You have to go through a Nigerian stock exchange, and it is done through stockbrokers. Stockbrokers have platforms. Quite a number of them have apps. Those apps are linked to recognized and licensed stockbrokers as their backbone. The apps are the platform or the interface through which you purchase and sell these things. You cannot buy shares on Instagram. And I like to say this thing: if it's too good to be true, particularly in investment, it is not true.
Yes, thank you, Dipo. Let me just stop you there. You know that there was an app. That's how bad it is. There was an app. She showed me the app that she downloaded. She showed it to me on her phone, showed me the WhatsApp group that was still very active with about 3,000 people, but the person that was, chatting with her privately had exited the WhatsApp group. And so the question is, do people really understand what we're talking about? Do they understand what they need to do? Now, I have learned people around the call. I know we have friends. I can see people already on Facebook and on YouTube. Now, people, we may think it's simple to us, right, Deepak, because of your background and my background. But I also know of someone that I went to school with that they gave just a receipt to. She paid money to some finance company, so somebody that said they were buying shares for her, and there was no certificate, there was no, she doesn't have a CSCS account, she just has a tiny little receipt that says the number of shares and everything. Now, we're not going to spend all of our time talking about that. What I just want to say to people around the call is, I have articles on my website. That talk about how you can invest in shares. We have YouTube recordings of conversations that we have had. We've been having an annual workshop since 2020 now. We have sessions where we talk about how to invest. And so what I would say, because we can go on and on about it deeper, the fraud and the way they deceive people, there are numerous ways, and we don't want to waste too much of our time on that. But I want people to understand that there are some people out there whose desire is to defraud people. And so the advantage that people who are connected to our community get is that they can ask questions. They can get support for free. If you want to invest in shares, I'm not a stockbroker. I don't have a company that does wealth management or financial advisory, but I will guide you to the right people. We were very lucky in the 2025 workshop. We had support and collaboration with Cardinal Stone. They can help, they can guide, and there's so many more other people. And if your money is flowing, and well, let me not say if it's flowing, no matter how much you have, if you want to be helped, I'm sure Deepak can guide you. Now, I said this conversation is not only for those of us online right now. Let's take it back to our friends, to people in our network, people in our communities who we understand can get easily carried away by all these offers on online. I won't say only Instagram because it can be anywhere. And like Deepak said, if it is too good to be true, like a doubling of, because what happened was that they first took 2 million, it became 5, then they told her the 5 million would become 8 million, and then eventually she transferred it, and that was it. So if it's too good to be true, please watch. Now, I will just come back on that. I will, dovetail on that deeper and ask you to share, with my audience this evening, some investment mistakes that you see people making. If, like I've just told you one, if you can remember or, dwell on any that happened in 2025, fine. Otherwise, if it goes back, please share some mistakes that people make when investing and what they need to guide against in 2026.
Okay, thank you very much. First things first, one of the mistakes people make is not having an investment plan. They say if you fail to plan, you're planning to fail. In as much as money flows through you and everything, and you think you have investment in things here and there, if it's not properly coordinated and not properly monitored, you cannot appraise your progress.
Mm.
Having an investment plan, having a goal that you're working towards, however small your income might be, the
Mm.
investment plan helps you appraise your progress and helps you gravitate towards the particular goal. Now, mistakes that's on a broad
Mm-hmm.
definition.
Level.
Now,
Mm-hmm.
specific mistakes that people make. Let me pick it here and there. First off, a lot of people have heard about the stock markets. You expect that, oh, the stock market is like a money market, a fixed income guaranteed instrument, like treasury bills, like commercial papers, like your fixed deposits, that you put 10 million here, after a year, you probably get 2.5 million interest and everything. uh, Unfortunately, a lot of people still make that mistake. They say, "Oh, I put my stockbroker told me to buy shares at 10 million. Today it is 8 million. They swindled me and everything and all that." People go into investment with a herd mentality. Everybody is doing it. Let me just do it. A major mistake. That's why there's always a caveat when we advise people. We still put DYOR, do your own research. So it's not enough that, okay, you have an investment person. You still also have to verify the claims, the postulations from the investment personnel. So it's a major mistake people make. You just hear of something and just jump at it. You don't have. It's also in line with the first point I made, not having a financial plan, financial goal. If your financial goal is long term, okay, I want to have XYZ amount before I retire. How many more years do I have to retire? Then you do a trend analysis. Which investment instrument has given the best return? You calculate and compute how much do I need to put aside. Where am I diversifying into? Then you would realize that not doing all of those things is actually a mistake, which leads me to another mistake people make: not diversifying. You just focus on, oh, I'm doing Ajo, which is a fantastic thing. Ajo, to me, it's particularly if you get to pick early enough, it's an interest-free loan. But I mean, when you pick last, I mean, it might not be. But I mean, if you pick early enough, it's an interest-free loan, way for you to save. Like I always tell people, which is another mistake again. It's interwoven. You don't diversify well enough. You think you are saving money and that you are investing. Unfortunately, you're saving money and it's like you're preparing meal for inflation to feast on. Money in the bank is the food that inflation eats. Money is supposed to be flowing and working, but you just think, oh, I put 3 million aside every month, I'm okay. You think that you don't differentiate between amount of money and value of money. 5 years ago, in fact, 6 years ago, 140, 360 million naira would have given you $1 million. Yes, when the exchange rate was 360. But now,
Mm-hmm.
360 will barely give you about 200 and ten um, $1,000 now. So amount and value, the same amount but different value. So majorly, not getting financial education in
Mm-hmm.
summary is a main mistake, and not having they always say you should have a lawyer, a doctor, maybe someone in law enforcement in your circle. I say you need me in your circle. You need someone
Absolutely.
in your circle, because sometimes it goes beyond the professional. Okay, come and invest money for me. Just having someone within your circle that you can always bounce things off to know, okay, does this sound real? Does this make sense? And you get better exposure, and you'll be more informed in the decisions you take, because investment is a journey. It's not 100 meters dash. It's a marathon. You keep having milestones and extending your milestones. But people, mostly from my interaction, they want a get quick rich scheme. Okay, I've put 10 million today. I want 20 million by end of the year. But you forget that if it gravitates towards the abnormality, except for where we some movements in the stock market, then it is not true. If the fundamentals are not, if you cannot explain, if someone tells you, oh, you bring 10 million to join, then different layers and everything, they are just baiting you for when the big catch would come and they will take your money. So you cannot explain it. If no one around you can understand it, then it is not real. It's a major mistake. People are still making. So tomorrow, Ponzi schemes are still thriving. You bring out the Ponzi scheme tomorrow. This time last year, there was one that reigned supreme, CBEX or something.
CBEX, the banner one.
I know people that lost a lot of money. Someone I know personally that I've given advices went behind me and put about $500. He couldn't tell me. Yes, because the promise of a lot of people tells him, oh, before your money can double, let's look at a 3-year period, or let's diversify 40% in stock, capital market, and money market, and everything. Someone tells him, you put your $5,000 in 2 months, you double it. He feels, oh, this guy doesn't know what he's saying and everything. Then
you're too slow.
Exactly. If it's too good to be true, most likely not true. So major mistakes people are making, and not paying attention to the capital market. That is the only way you can outperform inflation. I will say it again. It's a mistake I made last year. I didn't pay a lot of attention to the capital markets, that's stock market and buying shares and everything. I admitted it last year at one of the forum. Not paying attention to it, it's a major mistake. I mean, I personally, I feel sad when I hear testimonies from, oh, so stock was so amount and everything. But they say the best time to plant a tree was 30 years ago. The next best time is now. So I'm planting my trees for the next 30 years, and I hopefully I'll start reaping the fruits that will sustain me. So that takes off the mistakes.
Thank you very much, Dipo, and I thank you so much for your honesty. And you're not alone in that mistake of the capital market. And I don't know if your own situation was awareness or procrastination like mine.
Procrastination and awareness. I was aware, but I just felt what's going on there. I had a closed mind, which was completely wrong. But hey, I'm on the train now, and I'm moving very fast.
I'm with you on that train. I know that Pastor Nee is going to talk at some point, in this program, because he's a guru in the capital market area, and he's one of our, mentors and facilitators in this community. And he has shared so much information and giving me assignments on how to improve my, capital, my stock portfolio, that procrastination certainly has been a showstopper. And I go back to, it was deliberate that I started the program with that comment from Pastor Kubui this morning. He says that it cannot be Happy New Year. It should be Happy Old Year if you're bringing the habits of 2025 into 2026. So I'm promising myself, I'm promising you, Dikwa, that this year we're going to rock the capital market. Thank you so much for that analysis. Thank you so much. And I hear you talking about financial targets and having a plan on what you want to achieve, right? Because it's what will give direction to what you want to do this year.
Yes.
And so what it means that people on YouTube, on Facebook, and other panelists that are part of this conversation, we almost have a target of where we want to end up financially this year. And I'm with you that my stock portfolio is going to experience something very huge.
Yes.
But we have to do it carefully. Thank you so much, Dikwa. Time is, going by. Now, having asked you that, I think we have Dr. Tony on the call, but I'll just finish with you and then give you a break, and then we can ask her some questions. I think she might be having problems with her camera. So, Dikwa, for 2026, of course, most of the people around the call are residents in Nigeria, and everybody is like, what is this new tax law saying? How are we going to survive this new tax law? Before we used to hide behind treasury bills.
Mm-hmm.
We used to hide behind treasury bills because the income from it wasn't. There was no need to. The banks were not taking withholding tax off that and all of that. So, what are outlets that you want my friends around the call, including myself? What are new outlets or great outlets that we can focus on this year? Where I don't know if there's still anywhere we can hide from this tax thing, but how can we invest this year to make the most of what we are putting on the table? Where, what direction, what mix? Just speak to us freely on what you think would be a good investment approach to 2026.
Okay. Thank you very much. For a lot of us, yourself inclusive, I remember there was a conversation we had years back when I was still with my former employers, where you were asking me about why the amount you're expecting at maturity was lower. I had to explain the concept of withholding
I
tax.
wanted to take you to court.
So I mean, it's not. So when people talk about the new tax laws, there isn't anything so novel about it. Really, it's just adding more to the taxable items. The idea of withholding tax has always been there. You get taxed 10% on the interest. Now, a misconception that a lot of people have, they think the tax on investment, it's on your principal. No, it's on the interest earned. So, for example, you earn 10% on an investment. So mathematically, 10% of your interest is 10% of 10% is one. So the real interest getting to you is 9%. So, like I discussed with you earlier, there's really no hiding place except you are you are someone that is in the pension brackets. You can reduce
Okay.
the amount of tax you pay by increasing your RSA contributions monthly. Then I know aside that, really, then probably insurance, life insurance. But really,
Okay.
for me, it's 10%. It's not this thing. Maybe because again, it's not something new to us.
You.
In fact, as a matter of fact, back in the day and up until now, when negotiating deals, um, investors, I mean, fixed deposit deals, mostly investors tell you, okay, I want 10%. I don't care whatever the tax is. At the end of the day, I want to get 10%. So we will now factor the costs to ourselves and say, okay, if it's profitable. And another way you can escape reasonably is the mutual funds that have some underlying instruments that's a bit lenient on tax. So the ones that are heavy on government securities. But then again,
Okay.
if you are open to grow your investment so well, I always say it personally, mutual funds are for beginners. Mutual funds is like
Not aggressive.
yeah, it's a way to cultivate your funds to an appreciable level before you disperse them.
Take bigger risk.
So rather than having your money piled up in the bank account, your savings account that you're earning maybe 6 or 7%, you have a standing instruction. It goes into a mutual fund where you earn not worth about 17 or 18%, which in itself is a quasi savings slash investment
Investment.
because of the yield. Then, when an opportunity arises, maybe you want to take advantage of Dangote refinery IPO coming up, you pull out from there, you invest and all of that. So, on the long run, we would all pay it, but what we should now do is properly diversify our portfolio such that we are earning more. When you earn more, you set a target of 3 million returns on your portfolio for the year, and you've done so well to 4 million or 3.5, you wouldn't be so bothered about it. So the way I see it is, it it makes me more inclined to exploring areas that I have not particularly paid attention to before, or maybe I've ignored. And I also would like to say that investments are in circles. There was a particular time that you can testify to this, that convert to an extent, diversify currencies because of the volatility. Then now that is not particularly what you should be doing, except you have the foreign currency. So even foreign currencies now returns are being taxed 10%. So
Yeah.
we have astute professionals drafting these laws. I have colleagues on the platform, so they know where all of these things are. The only way out is be a bit more diversified in your investment approach.
Thank you, Dipo. I know that most of your clients are high net worth, but I also know that you're positioned to help people uh, start their investment journey, if even when they're not yet, high net worth individuals. Can you please explain what the possible outlets are for someone who, for example, wants to start with a 50,000 naira or 100,000 naira to start his investment, in whatever area?
Okay, fantastic. First things first. What's the goal?
The
You know,
goal.
oriented, short-term oriented. That informs the decisions you take. But I want to assume it's long-term. Fantastic. 50,000 monthly is 600,000.
Let's assume long term.
Yeah, long-term, easy. However little the amount is, starts now. Age also matters too. These are the questions we always ask before we prefer investment advices. Age, expected responsibilities, and all of that. But
The
on a general,
liquidity requirements, yeah.
yeah, I want to demystify some things, and I'm going to be particular about the mistake I made last year, so that people don't make it as well too. These days, unlike before, that you need to have some tremendous amount of money before you can be active in the capital market. We have apps now that
Okay.
that are linked to recognized stockbrokers, that you can buy shares as low as 10,000 naira, 5,000 naira.
Okay.
Yes, yeah. So you're on those platforms. You identify. You get the advices from your network. Again, it's also important that you belong to a network where these things are discussed.
Yeah.
If people are buying 1 million units of GTCO, and all you can afford is 20, you have still earned, if the earning per share, if the earning for the GTCO for the year is 14, you get your own 14% too
Mhm.
of the amount you bought. So it's important that you go into that space. Then a bit in mutual funds, like I said, mutual funds is like a collection, because the amount is not too significant to make major investment decisions. So a bit in mutual funds, you're earning about 17 or 18%, and strategically be investing in target penny stock. Penny stocks are stocks that have good fundamentals, but the prices are still low. I'll give one or two, but do your research. A company like FTN Cocoa, we all know the importance of cocoa in our system, and the price of cocoa has been going up. Company like Champs, company like Ella Lakes, these are companies that over time, if you follow that trend and the trajectory of their business, um, can likely give you a 50% to 100% return in 2 years, because of the space they are operating in. And if we go by happenings in the market last year, and added to the fact that this year it's expected that the inflation will drop significantly between 12 and 13. We're currently at around 15.15 or thereabouts, and there's been a stability in the system. And with inflation rates dropping, now this is just my own idea. I mean, people should do their research, but with inflation rate dropping, the trend that we see mostly is there'll be capital flight from the fixed income guarantee because people now want to earn more, and because of the past performance of the capital market of last year. I mean, we got some stock doing 330 something percent return.
I saw some.
Yeah, Better Glass was. I mean, I don't want to remember my mistakes, but we moved.
It's too painful.
Yeah, very painful. So it's expected that the capital market will still experience that boom. Returns with inflation rates going down, returns in the money market space will drop.
Yeah.
So all the era of 20-something%, 18% might start tending towards 14, 12.
Started experiencing it late last year.
Yes, exactly. Government T-bills are now peaking at 17, 16% for 1 year. So the well-informed investor will look at GTCO, for example, that is giving 19 point something any per share. Yes, GTCO any per share is projected to be 19.46.
That's guaranteed trust, right?
Yes. Zenith Bank around 25.07, UBA around 18.29, Access around 12, First Old Co, that's First Bank, around 17.88. I mean, just a few in the Fugas, like I would call them, First Bank, Union, UBA, GT, and Zenith. So my own postulation is that we are still going to see more interests in the capital market, and this is global. Inflation rates are dropping. In the US, Trump has been pushing for the Fed to drop rates. Now, if interest rates are dropping globally, Nigerian stock market NGX was top 5 best performing for the year for last year. So naturally, to attract attention. So for someone that doesn't earn that much, target the penny stocks with good fundamentals. Don't just say because Diko has said Charms or Ella Lakes. Do your research. The good thing about these apps is that you can follow a trend. You can you can check, okay, what does Ella Lakes do? What does Charms do? What does FTN Coco do? You check their books. We have AI these days that can interpret data for you and all that. So for someone that is long term, with companies that have the sound fundamentals, you most likely will not go wrong in the stock market.
The choice.
Properly monitor it.
Thank you, Dipo. I hear you loud and clear. And some of the things coming out is that there's no one size fits everyone. People need to design their decisions around where they want to end up and what they're looking forward to. And like you said, we're at different stages of our lives, right? But at the end of it, what is important for people hearing this evening is that don't walk alone. Send a DM if you want help. There's a gentleman who joins us from Ondo State, and I was very impressed when he asked to be connected to Cardinal Stone after the last workshop, and he just started his investment journey with 50,000 naira.
Yeah.
And he's going to move forward from there, right? But he has understood the importance of starting, and he asked for advice. He asked, after the workshop, he wanted to know how to go about it. And I said, these are the experts, talk to them. And so if you want help, if you are high net worth around the call this evening and you want what you discuss with Deepo stays with Deepo. I don't even have space to take on my own information, not to be looking for people's information. And the thing about people who do what the kind of work Deepo does is that they handle confidentiality so well. So you're very safe. And if you're just a starter with your investment journey, you also just want to build it up, send me a DM and that's why I'm very proud of the people that partner with me in this community to get these things to people for free. Between Deepo and other facilitators, Pastor Nee, myself, my own experience and the little that I know, we will be able to advise you and guide you right. So if you didn't invest in 2025 in the capital markets, you have heard Deepo, this year is a good year. It's going to be a good year to look in that area. If you need help, we'll guide you. If we can't help you, we'll tell you we can't help you with this thing, but we'll steer you towards where you can get help. Now, time is going deep. On my last question for you before I go on to the other guest is, I know that sometimes opportunities come, and I have a small group of people, I have a closed WhatsApp group of people who ask me questions and want mentoring in some more intimate ways. It's not good, but sometimes I get adverts from the banks and the institutions that I deal with, and I see offers of commercial papers. And I just post it there. And like you say, do your own research. So I always put it there and let them know where it's coming from, the source. Sometimes, or most of the time, the commercial paper rates are usually higher than other money market instruments. Now, just explain to the audience what you would want them to check out before investing in commercial paper. So the risk involved, returns, just what they need to understand, because some people don't want to do it because they don't understand it, and then
Okay, thank you very much. So basically, what are commercial papers? Commercial papers, simply put, I'll try not to sound academic. Basically, banks lend out money to businesses. After a while, these businesses realized that, okay, the rates that the banks were charging were quite high. So what do they do? Rather than take the money from the bank, lend from the bank, these businesses approach the public. They're borrowing directly from the public by issuing commercial papers, arranged by financial advisors and issuing houses and all of that. So where a bank would charge you maybe MPR plus 8 plus 4, like 30% or whatever, if they come to the market and they're paying 24%, all charges inclusive, they pay 26%, it's still a lot cheaper for them. So it's just you knowing the people at the back end. The front end has always been, you give a bank money for fixed deposit at 20% and you go home and smile. But that money literally has been given to Deepo Enterprises at maybe 28% or something. So Deepo is saying, you know what, I don't want to go to the bank. I want to come to the people directly. So I hire a financial advisor, issuing houses, stockbrokers, and everything. They advise on the terms. They examine my books and say, okay, this is what I can leverage on and all of that. So that's the background for you to know what commercial papers are. Commercial papers would pay higher than government instruments because the higher the risk, the
higher the returns.
The higher the return. Natural, that's the rule of investment. However, from experience, there's not been any case of bad commercial paper
defaults. Yeah,
there's not any defaults. So what you look out for, the blue chip companies will pay lower than the other companies that are not as rated. Credit ratings matters as well too. But all in all those are just academic terms. The reality is a renowned issuing house would not come to the market with Deepo's commercial papers if they don't some checks. That's the reality. They will not come, and they will always ensure that the liabilities are not up to the assets. So in case of liquidation, it's not like in case of liquidation, which has not happened, your money is still there. So generally, this is me giving an advice. I'm not affiliated to anyone. Commercial
Of
papers are
course.
not entirely bad. Um, um, just the only difference when you see a Dangote paying 14% and a Deeper Enterprise offering to pay
18.
17%. The difference that premium is because Deeper Enterprises doesn't have the name and
Yeah.
the credit rating of
Yeah. Of
Dangote.
Dangote.
Doesn't mean Deeper Enterprises is bad. I get that question a lot when people think that, oh, why is this one paying higher and this is paying lower? Does it mean this one is on paper it's riskier because you rather want Dangote to owe you money than Deeper, really. However, um, looking at it from my experience, there's not been any issues.
Yeah. Thank you very much. You know that I'm very skeptical about that, but
I know. I'm
and
talking to you personally.
thank you for simplifying and explaining it that way. And maybe what we just want to add is, if you have 100,000 naira worth of, portfolio, then you don't want to put 90,000 naira in commercial papers. You want to balance it out. You want to make sure that not everything that you have, that's in one direction. So, and really, thank you for the reassurance, because sometimes when I even get this, notifications from the financial institutions and I share with my friends, I'm like, you're offering them this, will you do it, But I hear, and you're very right, there hasn't been any story of, a default or anything that has gone down south. Thank you very much, Dipo. I'd like to take a cup of water. I'm always very grateful when you're with us. Please stay with us. I want to see now if Dr. T is around to share her experience with us. Dr. T, can you hear me? Are you muted? I think we have a connection issue with her. All right, NG, thank you so much for joining. Can you hear me?
Hello, Bimbo. Yes, I can hear you.
Thank you so much, NG. Ladies and gentlemen, Mrs. Ngozi Mbonuike, she's been a very ardent and committed member of the community, and she's such an inspiration because I see the effort she's making at her wealth, creation, and the way she's carrying her sons and her children along to also learn. Ngozi is a quality assurance manager with Intercontinental Distillers Limited. And I asked her this evening to come and share some words with us because, in particular, I know that NG is preparing for retirement. Am I right?
Yes, you are.
And congratulations again. NG and I go way back to when we were in college, when the federal government colleges were what they should be. Ooh, I didn't say anything, but we had so much.
Go Unitate.
I shouldn't say it. So Angie and I have been friends for more than 30 years, and she's been supportive of this community. And when she clocked, is it 30 or 35 years in the role?
35
years. When she clocked 35 years, there was, a parade by her team, and it was so beautiful. We had it on a WhatsApp group, and I'm like, oh, you're retiring. And she says, no, they're just celebrating ahead. Retirement is coming. And so it's a big congratulations to her and she's also a coach, so a lifestyle coach in health matters online. But I want her to share with us this evening. There are so many questions, but we don't have time. Angie, I'll just ask you and speak to us in the next 6 minutes, about this. What are you doing now that you know that you're going into retirement soon? Are you doing things differently? Do you have any regrets? Are there things you think you should have done earlier than now?
Okay, thank you, Bimbo. Thank you so much for the work you're doing and doing it free.
Thank you.
Really, 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 thank you. Thank you to all the resources you keep bringing. They've helped me a great deal to, try to figure out how to save better, invest better, and do things differently. And then talking about retirement, everybody should start planning for retirement once you start working. The mistake most of us make is to wait until, oh, I'm turning 60, that means I'm retiring. Then I start running around the whole place. But you need to start planning early, looking at your expenses, looking at your associations, looking at your investments. What do I really need? What kind of association should I be in? What kind of savings should I make? My expenses, what can I do without? Because in retirement, you can't carry the same type of expenses that you were carrying while you were working. You need to prune and remove the ones and leave only those that are actually essential, so to speak. Now, in planning, you must look at all of those and then look at what will I be earning. There's the pension fund. Some people don't even know what to do with their pension fund until they've received it. And if that happens to you, you're bound to make a mistake. I've heard of people retiring and you're asking them, what kind of are you going to do annuity, or are you going to do program withdrawal? And they're asking you, what is that? We can't be, we can't be in that state. If you're planning for retirement or if you're nearing retirement, you should already know where those resources are going to and what you do with it at the end of the day. So planning is key. Planning is key. We can't overemphasize planning. Now, the kind of investments you're making when you're nearing retirement will be different from the ones my 20-something-year-old son will be making. So I can't dabble into the capital market now. I've never really been there. So if I start investing in the capital market,
this year. I'll have a talk with you privately. Don't worry, Jifa will guide us.
Okay, I will need you to convince me because I don't know. I want something that will give me yields in the next 1 year or 2 years, not something that will be going up and down and left and right. So
don't worry, we'll talk about it.
When you're nearing retirement, you have to be really, really, really cautious.
That's a stick.
Now, your health is important. While you're in employment of some sort, the company pays for your
health cover.
What will happen after retirement? These are discussions you're supposed to have with yourself. What would be one of my regrets of in my career in terms of my wealth and investments and everything? Not starting on time. And that's why I keep talking to my junior colleagues and my children, and I say, you need to start saving early. You need to start having financial literacy early. You need to start making decisions early. If I had the information I had since about 5-6 years ago, from when I joined employment, I'm sure I'll be a very wealthy woman now. I'll be one of those that You
mean wealthier?
I would have been managing my wealth.
You mean wealthier?
Yes. So let's start early. We're going to make mistakes, but we learn from those mistakes. Thank you.
Thank you very much, Ngozi. Thank you so much. You've shared so much in the little time that I gave you. One question before I ask Pastor Niyi, and then we just, we can wrap it for the evening. I know I'm deliberately asking you this question because I know you do a lot of this, and I just want you to share with others. How can we help other people grow wealth? I know it's something that you're passionate about, and like you said one thing already, guiding your junior colleagues. But how can people around the call, what would you recommend to them? Should they, what should they do? Should they just hear for themselves? What should they do?
No, you for everyone on the call, I expect that by the next meeting, you'll be inviting 1 or 2 more people to come in and learn. It's free. And look for other platforms where they are teaching.
Absolutely.
and then join.
Yeah.
But we need to keep sharing. We need to keep sharing. We need to keep sharing.
Thank you so much, Angie. We would have our own conversation when it will be you and I and all the kind of people that you coach and mentor, because this financial education conversation has different angles and directions. Thank you so much for joining us today, and for all the encouragement that you give to me on this assignment. I'm very grateful. Thank you so much.
Thank you. Thank
All
you.
right. All right. Thanks, Dave. Dr. T, can we hear you? Otherwise, I think I'm so sorry, ladies and gentlemen. We would have to redo it another day, because she does have a lot to share with us. She's been a member of the community since we started, and she has some stories, some real good success stories to share with us. Anyway, as we wrap up, Pastor Niyi is one of the facilitators and one of the mentors on this community, and I just want him to tell us some of the things that we should drop in 2025 that we shouldn't bring into 2026, and what he expects us to do better in 2026. Engineer Pastor Niyi, thank you, sir, for joining us.
Can you confirm that you can hear me, please?
Yes, we can, sir. We can.
Okay. Good evening.
We can see you too. Yeah. Good evening.
I think 2025 was a fantastic year if you talk about investments, and 2026 has also started quite well. Things I would say we should avoid: number one, fear of missing out. People chase some stocks because they are afraid of missing out, even though some of those stocks or investment, those are fundamentals. The second thing, if it sounds too good to be true, it is likely too good to be true. You don't need to chase after 100%. You'll be so surprised. 10%, 20% returns consistently over many years will likely get you to where you want to be. So we don't have to be running after investments we don't understand just because they are promising fantastic returns. Third thing I would say is just get started. Procrastination has been part of the challenges most people have. When I have more money, I will start. When my salary gets higher, I will start. When my financial situation gets better, I will start. And we never really get started. So my advice is just start with whatever amount that you have. There is always an investment outlet for everybody. FGS savings bond with 5,000 naira, you can do that every month. When you start and you have consistency, you'll be surprised at how easy it becomes for you even to do investment. And I love when the speaker was talking about there was a time when what everybody was doing is changing their naira to dollar. If that's what you did in 2025, I'm sure you made some losses because the naira appreciated against the dollar last year. And you will likely see that naira is stable. So this is not the time to be changing forex. You might want to consider investing in Nigeria, investing in Naira, and getting good returns. Thank you.
Thank you so much, sir. Thank you so much, sir. I wanted you to talk about those that have, stocks and managing it. I thought you were going to use a hammer, but it looks like 2026 is a good year. You're not using hammer or cane on those that are not doing what they should do. Thank you very much. Dipo, we're about wrapping up now. Any last comments for the members of my community around the call? And when you're giving your last comments, can you please tell us how we can reach you? Of course, they know they can reach you through me, but if people want to reach you directly, it's fine.
Okay. Basically, to add to what's been spoken, I resonate with what Pastor Ladipo said very well. So, belong to a community. Don't do this journey alone. Like I said, like we all have quote unquote spiritual people, lawyers, doctors are in our corner. You need
A
a
money person.
deeper
Yeah,
in your space.
yeah,
Then
yeah.
social
On
media
a
also
serious one.
helps too. Your algorithm, when you start to show interest in some things, your algorithm will push you.
Okay,
There's
true.
some people I also follow too to confirm and add to my own
Knowledge.
knowledge. No one
Yeah,
knows it all.
yeah.
The market thrives on information. It's how quickly you get this information that helps in most cases. So belong to a community, utilize the social media very, very well. Quite a number of people that you can follow that are active in that space. And stats, just stats. However small you are, one of the major things in finance is compounding interests. Just stats.
Mm.
And you'll be amazed that with consistency, a consistent 20%, 15% over the years is better off than a scheme that offers you 100%, 80% that you do not know the underlying transactions behind it. If you cannot explain the underlying, then it's most likely not true. And to
Not
reach me,
true.
oladipupo.ojo at meadipl.com. Send me an email. We'll talk. I also share a passion to see people better educated in the investment space, financial management, budgeting, and financial planning. So oladipupo.ojo at
Thank you so much,
MEA.
Deepo. What I'm going to
That's it.
Yeah, I'm going to send I'm going to send those details to people that register that I have their email addresses. So I'm going to share Deepo's contact details with everyone. Ladies and gentlemen, thank you so much for being part of our first talk of the year. Um, I think we're just a few minutes over 1 hour, and that's how we plan to keep it short and straight to the point this year. I want to thank Deepo. Thank you so much, Deepo, for all you do behind the scenes. Thank you for all the advice that you give to me and your patience with my questions. Ngozi, thank you so much. I'm grateful. Thank you for joining and thank you for sharing your experience. Pastor Nii, we're always grateful to you. Thank you so much for also joining us. Dr. T, we missed you, but would have to take on the conversation another time. I'm very grateful to everybody. I believe those are the people that shared with us this evening. Thank you so much, ladies and gentlemen. I would be sharing Mr. Deepo Joe's details with you so that you can reach out and ask questions and begin to grow your wealth. Remember what my pastor said today, if we bring the habits, the bad habits of 2025 into 2026, it will be difficult for us to make it a very happy 2026. Now, ladies and gentlemen, the things that we did that or the things we should have done in 2025 that we didn't do so well or that we didn't do at all, that we need to do to grow our wealth and earn more, save better, and invest well in 2026, please make sure that you stay connected to us so that you can learn these things and really make 2026 a beautiful year for you financially. Thank you to my team, Timileyin and Dorcas. Thank you so much for all the hard work behind today's presentation. I'm very grateful. Have a good evening, everybody. Thank you so much.
Bye.
Bye, sir. Bye, everybody.